Amisha Vora joins in to talk about this and lots more as well. Amisha, great having you. Thanks so much for joining in. Want to talk about the markets at large, but just a quick thought on nasscom coming out and saying that we'll grow at 8.6%. I mean, what's the surprise there?
I think to some extent, and constant currency, if I understand right, it's 8.6% constant currency growth in FY17. Is that for year 17? Is that what you are referring to, right?
Yes,
I think it's a moderate growth that we are talking about, and broadly because of the result commentary of some of the larger companies in the sector, I don't think it is too much below expectation.
So, having said that, Amisha, what would you be doing with IT by and large? I mean, is it a sector that you would just put on the sides, back burner for the time being because the growth isn't there? Or are valuations compelling enough for you to start, maybe an SIP, maybe invest a small amount every month for the next 6 to 12 months because at some point of time the sector will revive? How are you approaching investments in IT?
So I think, in IT stocks particularly, the growth, in the growth which attracts investments is missing. But at the same time, they are generating free cash flow. That is what attracts, makes them attractive, because that huge cash flow generation can either get them acquire something and buy growth, or it can lead to either buyback or some cash distribution. So either ways, at these valuations, those will be the extra triggers which can give a slightly decent return. Whether they will outperform the Nifty, etc., at this juncture, difficult to say that. And I think re-rating of the sector is also difficult. Growth is moderate, but the only thing why it will still remain in the portfolio at neutral level is, I think, is because of the cash generating business and the cash lying in the balance sheets.
Okay. Amisha, the other, we were talking about this yesterday as well, the other big result that has come out is Sun Pharma. It's only that Tata Motors was just such a big disappointment that it, overtook any kind of analysis that one would have wanted to do with Sun. Somehow this one 4% down today, 1%, 1.5%, 2% down, and it's not a pharma stock that is trading at high valuations. It's correct. It's almost half from where it was, and still the market punishing it compared to the estimates. What are your thoughts here on pharma and large and Sun Pharma in particular?
I think pharma at large on a medium-term basis would still be okay, I feel. And I somehow feel that the kind of Trump issues which are coming up, some statements and some policies, but they cannot probably directly hurt Indian pharma sectors because he wants medicine prices to come down. But what is probably hurting some of the large Indian pharma companies is that US business sizes are so large and those markets are so competitive that the rate of fall in price of their existing portfolio has gone higher than the rate of new introduction of products that they are doing. In the process, their US portfolio, which is one of the most profitable portfolio, be it not only for Sun Pharma but even for probably Dr. Reddy's and Lupin also, is not growing at a pace that it grew in last 4 years. So that, I think, would continue to remain a challenge, that select few who would have either exclusivity coming up will have that burp in their sales, or somebody who comes up with some specialty product but doesn't look like on a very large base these top 3 companies can generate that extraordinarily high growth which they have enjoyed. Stocks are reasonably, they've gone through a cycle of complete re-rating. So there would be a phase of consolidation when stocks would remain range bound before they'll start looking attractive compared to their growth.
By the way, news bits on your screen. Remember last week Tata Steel had agreed to sell the specialty steel business to Liberty House. A lot of people saw that as a precursor, one more step being cleared on the decks, to meet the Thyssen Group JV norms. Now we heard that the Dutch Unit Works Council has opposed the Thyssen Group JV with Tata Steel. You don't know which way the die will roll, but this is not something that will go down too well with Tata Steel for sure. It's not a done deal. This may still go through, but yeah, a small hurdle that now comes in the way of the Tata Steel Thyssen Group JV as well. The merger JV, however you call it, was anyways facing extensive delays. This will probably add a little bit more to that. So yeah, not the best of announcements that Tata Steel would have been hoping for. Okay, what else? I just want to mark a few names. There are a few stocks that are of course doing well, the likes of BASF India or Polaris, which was recommended by Mahantesh Sabaran just a few minutes back. I think that has moved up after that interaction that came in. So from the levels that it was, a bit of a spike coming in there. There are a few other auto components like Automotive Axle and Gabriel, which are doing well. But Amisha, and then a V-Mart, which has gone up a bit. But Amisha, the one that I want to talk about is Parag Milk. Everybody was talking about this whole shift from unorganized to organized. Go out and buy some of these dairy companies. The results were there to see. Somehow the numbers from Parag Milk today just gave a feeling that all is not hunky-dory. The company is back to its issue price, which is almost a 33% cut from where it was some time back.
I think for the quarter, if I remember right, they reported some 700 plus bips reduction in EBITDA level, which is what has come as a complete surprise to analysts in terms of why EBITDA has taken such a big knock. And I believe they are trying to just understand, is it something one time, or is it impacted because of demonetization, or has it got anything to do which could be lasting? But my feeling still is that this sector as such is one where unorganized to organized is bound to happen, and organized retail is the one which is going to help in that direction. Of course, stock has corrected, and this stock continued to look costly even at the time of IPO. Then it started doing well for a while and is corrected. But I would think as a sector and as a medium-term story, it is still a very good bet. And it could be an opportunity to buy, though our research is not complete on this at the moment.
Well, Amisha, I will look forward to talk to you post this is complete as well, because it's a space that a lot of people believe in. Somehow this quarter's numbers, and look at that cut. I don't need to say too much. The market is giving its verdict. 19% down for Parag Milk. I think just about getting ready to dip below its IPO price of 215 at which the shares were issued to the retail investors. So, well, that's one story. Tata Steel is one story. We've seen what's happened with Sun Pharma, Tata Motors, a lot of red on the screen. As we speak, the index is down almost back to the lowest point of the day, in and around there, 8720. So any kind of bounce back has been sold into, and the CNX small cap index is now down 2% as well. So yet another dull day, or a poor day, in fact, poorer than the past few, because today the index, the benchmark indices, the Sensex and the Nifty have also corrected. Okay, Amisha, understand we'll have to let you go. Just last couple of questions. Firstly, on the markets as well, are you telling clients to take a back seat or accumulate certain specific names?
No, I would actually think that, post RBI stance, little bit volatility was expected, and now we are heading towards UP election results. So that would keep a little bit lid on the upside in the market. But frankly, I'm not bearish, and I feel that after 2 to 3 years of earnings disappointment, and particularly now when we have back-to-back two good monsoons, this including this Rabi, I would think that we should brace up for good earnings growth for next year, and whatever dips and volatility in the market caused either by some of the domestic reasons or particularly by even global reasons of dollar strengthening should be looked at for accumulation.
Okay, Amisha, just before we let you go, the last question, what is it that you would be willing to accumulate? I mean, you mentioned your analysis on Parag milk is not over, but it could be an area, but I'm not getting into a specific Parag or something else. What, post this earning season, what is it where you've changed your stance or you've enhanced your buy stance or recommendation stance and are telling your clients to firmly go out and buy it at these levels or at slightly lower levels?
So I think since we are betting a bit both on recovery in metal and those reflecting in bank balance sheets and the suppressed bank results for last so many quarters, out of the top picks that PL as a house recommends, some of the names which are coming at the top of my mind are State Bank of India, Jindal Steel and Power, and one very sustainable CAGR story that we like a lot is Thyrocare. So these three come at the top of my mind out of our coverage and top pick recommended list.
All right. Thanks very much for joining us and giving us that quick perspective. Amisha, really appreciate your views as always.